Hello and welcome to the Trestlebridge Market Observations Call. I am your host, Eric Jefferson. Now, before we kick things off here, just have a few words to keep you lawyers happy. And with that, we'll dive right in. I want to start by recapping the stock market last week. Now, we saw the S&P trade 5% higher. Not surprisingly, bond market continued to head lower here. Catalyst for market last week. We saw some decent earnings coming from some of the larger banks, again, suggesting the economy is still resilient. That's a theme we've continued to hear for the last several quarters. As well, there was a report on Friday that called or suggested we may see a 50 basis point rate hike from the Fed in December. That was somehow interpreted as a dovish pivot, or again, thinking about the Fed being less aggressive with respect to raising interest rates to combat inflation. Interestingly enough, market expectation was in between 50 and 75 in December, so not sure that was necessarily any earth-shattering, unique point of view. Nonetheless, drove markets almost 3% higher Friday of last week. Again, from my seat, I don't necessarily view this, even if we did get a pause following 50 basis point rate hike in December, wouldn't necessarily view that as a meaningful or a actionable shift. Not surprised if we did see a pause in rate hikes that was met with a positive market response. But again, I think those gains would be somewhat short term. For a meaningful and a sustained move higher, do think we need to see some progress on inflation. Again, as we've talked time and time again, a pause is not necessarily a pivot. Again, both would have a positive reaction on markets, but a pause, view that as much more short-term and less sustainable. Alternatively, two other scenarios that could put meaningful and sustained upward movement on stocks. One would be some degree of geopolitical easing with respect to Russia and Ukraine. Granted, nothing on the horizon there to suggest we're any closer. Or two, if we saw China revisit its zero COVID policy. That is something view as very unlikely. We'll actually discuss that more in just a minute. Turning back to the domestic front, though, about 20% of the way through Q3 earnings season. Again, that's where we hear from corporate executives talk about how their companies did, as well as provide a outlook or forward guidance ahead. Thus far, when we think about earnings, so the end of the day, revenue minus all the different expenses that a company incurs, wages, cost of input, materials, marketing, taxes, interest payments. The end of the day, earnings are tracking to a 6.5% growth for calendar year 2020. That was down from our January 1st estimate of 10%. So again, as we think about potentially a slowing economy or slowing growth, that has made its way into earnings. Granted, are many out there calling for further revisions, but thus far, that 6.5 does appear to be holding course. As we look to next year, expectations have not really moved, currently sitting at 7.5. And again, based upon what are some slowing leading indicators, do absolutely envision those will have to be revisited at some point. Again, those leading indicators are what a lot of corporate executives, what a lot of folks in the media are pointing to when you talk about potentially more challenging environment ahead. As we think about the balance of this year and looking to the year ahead, I think that will only place that much more emphasis on the fundamentals, or what a company generates in earnings, versus rewarding some of those more speculative growth names that earnings are 5, 6, 10, 15 years down the road. Again, think this is absolutely an environment where that higher hurdle, given challenging times, is absolutely going to reward those companies doing a better job of generating sustainable earnings today. That is by and large how we have positioned the equity chunk of our Trestlebridge portfolios. Shifting back to the geopolitical front, overseas, we saw Liz Truss's resignation go live early last week. That was the shortest stint as a British Prime Minister. That search is all but concluded, with Boris Johnson dropping out of the race over the weekend. All expectations are for Rishi Sunak to now take over, be the third Prime Minister. I believe it's 7 weeks. Again, That is a role typically held for many, many years. And then talked about China a little earlier. We saw the unprecedented third term of Xi Jinping's power, or his term rather. His power was further cemented when we saw the equivalent of his cabinet being filled with political allies. There's also a very interesting moment at a speech over the weekend where his predecessor had been escorted out. No further details on that, but by and large, when we think about the implications, number one, where Xi Jinping has been very strong advocate for zero COVID, don't necessarily expect that policy to reverse course anytime soon. Obviously, if it did, that would have a positive impact on global growth. As well, in the speech that he gave, a lot of emphasis on security and more nationalism versus promoting economic stability and growth. Again, that doesn't necessarily do anything to help buoy outlook for the global economy and or help international relations. With all of that, we also got a GDP print of 3.9%. Now, again, that is meaningfully higher than domestic growth in even throughout the developed world. But given the heightened geopolitical risk associated with that region, not surprisingly, the slowest or the smallest GDP number over the course of the last several decades has plummeted Chinese stocks down double digits in early trading. That is also following what has been an incredibly negative last few years for the Chinese stock market. At this point, it makes that region almost non-investable unless you're willing to take a very long time horizon, simply looking to buy stocks that are incredibly cheap. As we think about the week ahead, no major headlines. Do have U.S. flash PMI, that's Purchasing Managers Index, that gives some insight into economy, where we're going from here. I do also get earnings from a lot of the big tech names. Again, the focus, those companies have gotten incredibly beaten up this year. Will be very interesting to see how they have fared over the last 3 quarters, what expectations are for the road ahead. We'll get some inflation data on Friday, core PCE, that is what the Fed primarily focuses on. Get some inflation expectations as well out of the University of Michigan. But the big report will be Q3 GDP estimates. Get that on Thursday. Expectations for that to be modestly positive. Again, those are still estimates, so don't know that would meaningfully move markets one way or the other unless we got a huge upside or downside surprise. That's all for this week. As always, please don't hesitate to reach out if there's anything we'd like to discuss further. For now, connect. Have a great rest of the week. Take care.